We bring on board Arpit Beriwal as well to try and give us a sense as to how he's looking at the market. Arpit, great having you. Let me start off with the index itself. What do you make of the move?
Very good afternoon to all. This day we were waiting for quite a long time. So Nifty was forming low rise structure from past 12 sessions, and this is one of the rare scenario that we have seen that from in last couple of years that this structure has been forming. And today finally it is negated the formation of lower rise after almost 12 sessions. So looking from an index perspective, overall the upside is capped. At the same time, downside also Nifty is respected to 24,000 levels. So all in all, looking from a monthly expiry point of view, Nifty is likely to be in a range between 24,000 to 24,444. That is the immediate range. And once it closes about 24,444, then only there will be a clean momentum on the upside. But till that time, index is likely to be in a range with support at 24,000 on the downside, whereas on the upside 24,444. Talking about Bank Nifty, so Bank Nifty was relatively a bit resilient comparatively. So Bank Nifty also today opened gap up, and since then it is consolidating. But the good part is that it is holding about 57,500 levels. So Bank Nifty is also stuck in a range between 57,000 on the downside, whereas on the upside 58,000. So all in all, indices likely to be in a range with slightly positive bias because you've seen a corrective move almost in last 8 to 10 sessions. However, stock specific and sector specific action is to be seen going forward for next coming week.
Range-bound momentum expected with a hint of an upward bias. Arpit, hi, good afternoon. Also, give us your sense on which stocks or sectors are looking most attractive right now, because you did say it's time to be a little more stock-specific in a market like this. So on that note, which stocks are looking good? Any recommendations for our viewers?
So definitely there are a couple of sectors. First would be stick with the heavyweight, that is the pharma space. So pharma sector has been a huge outperformer, and looking at the sector-wise pharma index, there was some slight consolidation. But if you look at the bigger term, it's still very positive. And I look at the chart structure of Divi's Lab. So Divi's Lab has been a huge outperformer, a classical monthly breakout or above 7,200 levels. And since then we have seen a strong momentum. Though the stock is consolidating, but looking at the sector-wise, the stock can definitely hit new life highs towards 9,000, 9,500 plus levels. So from the pharma space, Divi's Lab would be a preferred pick. Second would be from the new age space. That is a lot of good momentum is seen in the new age sector, and that is pick would be Paytm. So Paytm also gave a classical monthly breakout above 1450, 1500 levels after almost 24 months. And since then, some cool off was seen, but the bigger trend was positive, and the stock can easily head towards 1700, 1750 levels positionally. So Divi's Lab and Paytm looks good for 6 to 8% upside move in the coming series.
Divi's and Paytm looking good right now. Kunal, let's talk about some sectoral moves right now, because we're seeing a good move on realty, IT, FMCG. The only index that's in the red right now is defense, but that too just a cut of 0.2%. Within Nifty Realty, we're seeing some very good moves in the Brigade. We've seen positive news coming in for Brigade Enterprises today in terms of their collaboration with the Kerala Health Department, 4% uptick over there. Lodha up 2.5%. Signature Global doing fine. Anything that looks good from within the real estate basket?
Yeah, I think DLF is starting to look attractive at the current levels. 675, 680 is where the stock is trading right now. Looks attractive. My sense is that the stock should be able to break past about the 700 barrier this time around, hopefully by start of the next week. I think if that happens, this could probably give a fillip to the entire real estate sector, the Nifty Realty Index, which has been taking a resistance around this 850, 900 kind of a trading range. So we may see a comfortable break about those 900 plus mark for the Nifty Realty Index. The other stock to look out for is Prestige, a stock which had, I think, corrected almost 10% from a zone of around 1740 thereabouts to sub 1600 levels, where the stock is trading right now. So I think at current juncture, the risk reward seems to be attractive. Even for traders to take a bet on Prestige at the current levels. And if there's a mean reversion of sorts, we could be looking at a decent 5% to say a 7-8% swing upside for many of the realty names.
Okay. That's on real estate. And Arpit, two stocks in the market right now that are under some pressure despite the overall breadth being quite cheerful. That's REC and PFC. And the reason why these stocks are under pressure is because Morgan Stanley has downgraded PFC to an equal weight from overweight and also cut the target price. And similarly for REC, they've downgraded the stock to an equal weight from overweight and trimmed the target price to 360 now from 430 earlier. How are you looking at some of these power financiers, REC, PFC? Any targets on the charts?
If I see the monthly setup, so definitely the stocks are in pressure. And if I immediate basis, if I see the weekly setup, REC has been facing hurdle again and again from 360, 370 zones. And from last 2 weeks, the stock is from low rise structure. So on the immediate basis, looking the setup as on the monthly and the weekly setup, low rise structure is likely to continue. And we can see some more pressure towards 310, 350 levels on REC. Along with that, if you see PFC also, as it's broadly, it's in under pressure. So monthly scale, almost a range breakdown, weekly scale of lower highs, lower lows. So looking at the setup wise, definitely there's no major reversal. And looking at the setup wise, definitely there could be some more pain before there's any major meaningful reversal. So PFC also can stock correct towards 350, 340 levels. So REC and PFC would be on the short side. And looking at the setup wise, there's no major reversal. On the upside, hurdle for PFC would be around 380, 82. And for REC, it would be around 340.
To watch out for on REC and PFC, and like Arpit was saying, the last 1 year also a cut of about 9 to 13% on all of those names, and those stocks have been subdued ever since then. But shifting focus then, I just want to take a look at some stocks that are at or very close to their 52-week high, and that's Welspun Corp, Lenskart, Sai Life, Leela Palaces, RBL Bank, Netweb, RR Kabel. You've got United Spirits. Good news for United Spirits earlier in the day that US FDA, the FDA, India FDA overhang is away from them now, so that looks good. OFSS is also just about 1% away from its 52-week high. Kunal, any of these names like a Lenskart, RBL Bank, Netweb looking good? And because these stocks are already very close to or at their 52-week high now, what's the further run-up looking like, if at all?
Yeah, I think what happens ideally in an ideal scenario is that when these stocks show signs of consistent week by week, month by month consecutive up move, that sets up the trend for many of these names. For example, I think you're talking about Welspun Corporation. The stock for the last, I think, 5 or 6 consecutive months has been showing signs of a very strong uptrend from a point when the stock was at 750, 800 just 5-6 months back towards the point when the stock is above the 2000 level. So the move has been quite spectacular for many of these names, and I would sense that on the back of the recent price uptrend for these stocks, the long-term trend starts to look attractive. The only catch over here is that many a times when traders get confidence in the market, they tend to buy these stocks which are at an extreme, and then once the market gets into a second leg of an uptrend, then there are sector rotations and stock rotations which happen, and the ones which are performed in the first leg, they take a bit of a back seat. So it's always better to try and aim for a price or a strategy where you can try and buy these stocks on corrections. So you need to keep some powder dry, or buy these stocks in a very staggered kind of a manner. That should be a strategy for many of these names. So they look attractive. The trend seems to be quite strong on the longer term basis, but buying the entire quantity at current levels may not be the right way to approach.
Okay, that's the take on some of these stocks that are doing well at their 52-week highs individually. But on that note, time to slip into a very short break. On the other side too, we'll be joined once again by Kunal and Arpit, and we'll take that conversation ahead. Stay tuned.